What's going on YouTube? Mike here, back again with Renegade Forex. And in today's video, I want to talk about 1 minute scalping and how to catch high reward trades or high value trades, trading counter trend. So if you find this content useful and you want to see more of it, be sure to subscribe to the channel and turn on your notifications. And let's go ahead and get started. So the other day I released a video breaking down a loss in this area here. If that's something that you want to see, definitely be sure to check out the other videos, somewhere around this one on the channel, because it was just a few days ago. But now I want to talk to you about being able to flip the switch on, your expectation and taking a loss, and then going, flipping the switch in terms of saying, okay, price is not going to go my direction. Now, how can I go with it in its direction? And that also includes things like trading counter trend like this. And so I want to use this example here to break that down for you. And in order to do that, I need to zoom out just a little bit to show you basically, a quick recap of price action leading up to this. And so what we have here is price. There was a very aggressive sell-off the other day, last week. At the time of filming this video, it was just a couple days ago, that caused this sharp down move. And then right here, we can see the price just kind of ranging around. So from this low here at this break of structure, we then come back up and we break this swing high, come down, we fail to break this low, we pull back up, and then ultimately we have a pretty sharp sell-off that does break structure right here. Okay, so once we break this swing structure, the expectation is that this high right here is now our protected swing high, and price would be expected to at some point in the future trade back up into the discount, or I guess in this case the premium of this range. Right now, since we have a sell-off from here to here, and that caused the break of structure, I'm favoring this supply zone as being the likely area to be mitigated if we get a continuation. Okay, there's nothing that says price can't just trade right through it and then go back the other way, go bullish again. However, based on what we see right now on the chart, the expectation is that overall the 15-minute trend is bearish, and at some point in the future we would see price run up here, do something like this, and then come and take out this low right here as well as this low right here. That's the expectation that we work with trading smart money concepts. And in doing that, we can then capitalize on moves running back up this way. Okay, you do not have to wait just for this break of structure. You do not have to wait for price to come back up here and then get in on trade on something like this that's pro trend. You can trade counter trend. And so I want to show you exactly how to do that on the 1 minute. Okay, so let's go ahead and drop down to the 5 minute just for a little bit more context, and then we'll break this few trades that I see in here down. Okay, so we come down here. We now know that at some point in the future, this is going to be our low that we target. However, we need to see smart money reprice this instrument up into the premium of this leg. Okay, so this is going to allow us, that concept right there that I just mentioned, is going to allow us to, sell high and buy low. Okay, so we're waiting for smart money to come up here to sell high. Okay, and in doing that, we can then, like I've said a few times, we can then capture moves like this that are counter trend our 15-minute time frame. And so now on the 5 minute, just to give a quick narrative, there's a few things that I can see here. So we do have a basically pullback. We have a bounce right here, a little pullback, reaction, continuation. And so right at this point in time, without looking at anything else over here, this becomes our actual change of character line or point. So as soon as price wicks above that, that's technically a change of character that would tell us that it's, on the 5 minute, it's very likely that the swing pullback is taking place or beginning. But in between that, we can then also see a few other points where it's like, okay, it's pretty obvious that we're going to start to actually change our trend and go the other direction. So we have a change of character right here, which right in this area is when I actually did a video on taking a loss right here. So this change of character, it then fails and it breaks above this high. So right here, at that point in time, okay, it's pretty obvious to me that the pullback is actually going to begin on this higher time frame, and we should look for counter trend trades back up into the higher premium of this leg. Okay, so at this point in time, let's go ahead and just mark out this low right here. or I guess it's not really a low, that candle, that demand zone right there. We can see price pulls back into it, mitigates it, and continues on to break structure. So right here, we have a 5-minute break of structure. Then have a 5-minute low. Then have a 5-minute high. Break and pull back that breaks structure right there. So then what can we do? We can look back right here and we can see this is a demand zone. We're basically including this bigger candle. Another way to mark this demand zone would be right here. Or you could also refine it to that. Now, if you refine it to that, obviously this is not going to work. So for those reasons, I always just have a little bit bigger demand zone if they're super small like that. It's kind of up to personal preference. However, for me, you know, something like this, I know in the back of my head that all in all, it's from this candle down is the demand zone that's created. And so yeah, it just kind of depends on like how you mark up your demand zones. But for this example, I'm just going to use this candle because we can see price comes back, it mitigates that, and then moves away and causes that break of structure. So now our expectation is right here. This is a strong low on the 5-minute. That price would then come back down into this demand zone somewhere in here and then continue back up, something like that. Okay. Now, obviously, it could look something more like this, where we have pullback, continuation, pullback, continuation, pullback, continuation. But regardless, until price tells us something different, that's our expectation at the time of, you know, what's on the screen. So let's drop down now to the 1 minute so you can see how you can capitalize on some of these moves on the 1 minute. Okay. So we do have a few examples. Now it's going to take me a minute to find where I was. So right here, at this point in time, once you see price come back down and this pullback back here, you can, first of all, if you're really aggressive, you could have set a pending order on this 1 minute demand zone that would have been triggered with this candle right here. And if you're following simple strategy, simple concepts, your stop loss would be right there. Your target would be this high. Or if you know that price is likely to come up, you know, even higher up into that range, you could then hold it up there to that supply zone. If you did the open to that supply zone, that'd be a 1 to almost 9. If you did even higher up, for some reason you thought this market was going to reverse, you could hold it up to, you know, almost a 1 to 12 at that swing high. However, for this situation, I would be, you know, I'd be pretty aggressive with moves like this and target either a predetermined risk or rewards of like 1 to 5, something like that, or hold a partial up into that supply zone. Either way. Now, there's a few other ways you could do this as well. So let's get rid of that just to keep the charts clean. Let's go ahead and look. If you direct your attention to right here, you can see a pullback and then a continuation that breaks structure right there. Right? Now, at that point in time, we then can assume that on the 1 minute, that's going to be our strong low. And then we can see right here, this little tiny demand zone on the 1 minute. See right here. You can see if I can get my tool. There we go. So that little 1 minute demand zone, price comes up from that, breaks this high, pulls back, mitigates this demand zone. And let's see what this potential trade would be right here. If you set a pending order at the top of that, you would have about a 1 pip stop loss, which is really tight. Honestly, I don't ever trade anything lower than like wait, is that right? Yeah, anything lower than like a 2 pip stop loss, which that just looks really weird for some reason. Let me just make sure I'm seeing this right. Yeah, for some reason that looks really odd. So usually my stop loss is about 2 pips, but I guess just because of the way that these candles were created, it looks really weird. So yeah, I mean, if you wanted to trade with the stop loss that tight, you definitely could have a 1 pip stop loss. And if, for example, you did hold that, you could either target this high right here and capture almost a 1 to 5. If you wanted to use predetermined risk to reward, for example, 1 to 8 or something like that, you could hold it to that. Or again, if you knew that price was likely going to be pulling back, you could then hold up into this demand zone or supply zone following the expectation of what we know price usually does, okay? And if you did something like that, it'd be like a 1 to 20, which again, not super realistic. I don't like to talk about big trades like that because usually it's not going to be super common that you get 1 to 20 trades. If you even if you just caught a 1 to 3 every day or a 1 to 5 every day, something like that, that'd be totally realistic as well. And so you can then see this other demand zone that we had marked previously on the 5-minute. You can see price retrace back into that and buy up. And when it does buy up from this zone here, we do get a 1-minute change of character. So we have a pause in price right here, run down, comes back up. You can then see at that high right there. You just snap that on really quick. From this little pullback down, run up, that's a change of character. Price then comes back down and mitigates this demand zone, okay? Now this obviously is not the cleanest example ever, but it's the 1 minute. If you miss it, then just wait for the next one. So you have a demand zone mitigation right there. And if you were in this trade, if you're watching this, you could see here another pending order right at the top of that demand zone, stop loss right below. You know, for me, I'd probably ideally like to have a little bit bigger, a little bit more room to breathe on the stop loss. But if you're wanting to get those 1 pip stop losses, it's definitely a setup that you can do that with. And then you can see here, okay, now depending on your trade management, you could either target this high for almost another 1 to 5. You could also use predetermined risk or reward ratios. So if you had like a 1 to 6 or 1 to 8, whatever you have set up in your trade plan, you had a 1 to 8. I mean, it would have just barely, maybe not quite tagged the take profit right there at that point, depending on if you're watching it or not. You could have closed it manually. Or, like we've already said, if you expect price to trade back up into that supply zone, you can hold it for even longer. Now, obviously, it's more likely that it's going to be doing something like this. So for me, that's why I don't really hold trades super long-term like that. But if you are someone who's comfortable holding, you can do that. For me personally, I try to take everything at least a 1 to 5. Obviously, that's not a hard rule like I've mentioned in the channel before. But for me, I would be trading something like this, just being in and out. And if you did that in a 1 to 5 or caught a 1 to 5, let's see how long that would take, for example. So if you entered if you got tagged in on that candle specifically, and then you hit take profit at this candle right here, that is 16 minutes. So in the matter of 16 minutes, you gain, 5R on your account. If you're risking 1% per trade, you gain 5% right there. If you're risking 3% per trade, you gain 15% right there. Whatever you're risking, you're gaining that in like 16 minutes, which is nothing. That's so fast. And that's like in the middle of the day trading New York time. So that's 14:30 New York time. So that's what, like 2:30 p.m. in the afternoon. You could just be, casually sitting here watching these charts and catching stuff like that all day if you wanted to do that. And so now I just want to talk to you about, if you want to get really crazy, you don't have to do this. And if you're not advanced, or, at least having, already mastered something like this, I would not necessarily recommend doing what I'm about to do. I would try to keep pro trend. But if you even wanted to get as detailed as trading counter trend the 5-minute, what do we know? Well, we know that this is likely, because this low caused this break of structure, this is likely to remain a protected low down here. So we can assume that at some point in the future, price is likely going to trade down into it. And based on our expectation of order flow and what we know in, using hindsight from back on the 15-minute chart, you can expect price to come up higher in here. Now, doing this kind of stuff does become pretty high risk because obviously you're on the 1-minute chart. The 1-minute chart is going to change trend a lot to facilitate the 5 and the 15-minute trend. So it's okay if this doesn't make sense. You also do not have to do that. But if you were someone who wanted to start taking trades counter trend, the 5-minute, using the 1-minute, you could do that. And so pro trend right now would be to wait till it comes down here and then buy up. That's a pro trend move. Counter trend would be selling down to facilitate that 5-minute pullback, doing what we see right here using this line chart, okay? So Now, for me, I needed quite a few confirmations in order to do something like this, but you can see right here a 1 minute demand zone. I guess if you refined it to that, it's not exactly tapping in, but we can go back a little bit, see that this is a little bit bigger down move. So on a higher time frame, this would be a clearer demand zone. With the lower time frames, that's just 2 candles forming that demand zone. You can see right here, okay, price pulls back, it continues, right? At this exact moment, it looks like it's gonna fail. And so what we can then expect is if it does fail, it's gonna come down, it's gonna break this structure, then it's gonna do something like this and continue, right? To facilitate this, basically, okay? And so at this point in time, if price were to do something like that and it were to break this swing structure right here, you could then wait for price to come back up into this newly created supply zone from one of these candles and take a trade that looks something like this, right? Obviously, this is very aggressive. Obviously, this is not required. But when you start to understand smart money concepts and how things work, you will start to then see trades exactly like this. Okay, you'll see that where you can trade that back down this way and you can just ping pong the market around. The better your understanding is, the better likelihood that you'll be able to see stuff like this. Okay, if you want to learn to trade like this, I do have a course that I just released. It's called the Renegade Forex Smart Money Concepts Academy. And I do have a promotional price going on right now. So if this is something that you are interested in learning more about, definitely be sure to check out the links below this video. I'd be happy to have you in the academy and teach you, everything that I know that I've used to get funded and learn to trade consistently without using any kind of indicators. So if that's something you're interested in, definitely check that out. Otherwise, if you found this video useful and you're not interested in the course, be sure to just subscribe, maybe share this with a friend, turn on notifications, because I'm definitely going to be consistently releasing content very similar to this in the future. And so, yeah, I appreciate you watching. We'll see you in the next video, or hopefully we'll see you in the academy. Thanks again.